Hello, everybody. Here we are, Anna and Robin again. We got the
Hello.
media working. Yay,
Yeah, I
technology.
know.
It's a good day.
We got new mics, like fuzzy mics.
Fuzzy mics, that's right. And we are here today because we are going to talk to you guys about a cocktail called the Moneymaker. And we're actually going to teach you how to reclaim taxes through real estate, which is like my favorite thing. I call it tax reclamation or tax mitigation.
Yeah, I guess like I was telling Robin, like when I was reading our notes, uh, it's we're so used to think about those items like in terms of the residential and investment properties and taxes. I was like, who doesn't know about these things? But apparently a lot of people don't. So we're gonna go through some important points and maybe start making saving you some money.
Yes, and I'll be honest, tax mitigation and tax reclamation is probably one of my most favorite topics. I teach my kids about it. I have always
She teaches
reclaimed.
it at school. Like I know
I
everybody like makes fun
know.
of it, like the school has to teach it, but it's such a like this is such an important topic, and I know you put some stuff in the notes that I didn't know.
Yeah.
That's cool.
Yeah.
Like yeah, all right,
So
let's do
there
the
is a
drink.
way that you can get your money back from the government
Yeah,
legally. So
that's
let's
right.
let's make the drink first. The money maker. That's what we're doing. Now the money
Because
maker is actually a super easy. Oh, I forgot to put this on. I'm really
okay,
failing today. Look at that. That's what we're doing
yeah,
today.
money maker.
The
Yeah,
moneymaker.
okay.
Okay, so back to the cocktail. So here is the cocktail. It's actually a super easy cocktail, and it's a
Yeah,
pretty simple cocktail. I'm really excited for the flavor of it because it's got kind of some of the nice sweet flavors
I
to
think
it.
it's gonna be like super delicious.
I know. So we have Eau Claire's purple, or sorry, prickly pear equinox, which is a pear vodka.
Yeah, you can use any pair of vodka. And I like, so I'm just gonna show this. We're gonna use the glasses that we're giving away this month. So we're gonna be drinking out of a very special glasses.
This is a month. You sound like
Come on.
Mario. Okay, so I put in melon liqueur. I've put in pear vodka. I'm now
Okay.
putting in lemon juice.
Oh, okay.
So simple. 3 ingredients, that's all it
Yeah.
is. And then
I'm
you
just
have to
gonna
shake
shake it.
it.
So I have to like, see, I'm still like, okay, I'm ready.
You have to like shake. You shake your moneymaker.
Ah, do this. I'm gonna have to like get like my stuff like those marocas.
There you go. I used to
I
have
got
those when
my
I was a little kid.
got my exercise for the day.
Your exercise. And then we're straining it into our fancy
And no,
glass.
obviously it's like green as the color of money.
That's right. Actually,
Yeah.
good point.
Oh, it smells good.
It does. And then we are just topping with dried lemon.
Well, cheers.
Cheers. Here we
Oh,
go.
wow, that's even makes like a metallic sound.
They're crystal.
Oh,
That's pretty refreshing.
yeah. It's a little bit too sour for me personally.
You got to put in less lemon
Maybe
juice.
maybe less lemon juice.
Less lemon juice, more pear vodka, more melon liqueur.
I don't hate it. It's good.
It is. It is an interesting one.
Yeah,
where
I
actually
don't know
this
what
would
I
be a
was
really
expecting.
good one for? This would be a great punch.
Mm.
And this would be great for Halloween.
Yeah, because it's green,
It's
right?
green, right? So it would totally
Like
go for
a
Halloween, and you could
poison.
call it like witch's juice.
Yeah.
And I think it would be a good one for a Halloween party.
Yeah, I think it's like a little bit too much lemon juice, but the flavor is great.
Yeah.
And also, if you guys would use like a pear vodka from Grey Goose, which is more
Sweet.
pear, more sweet, and it's like definitely more of a pear taste. I think it's also gonna go better with this one.
There you go.
I almost feel like this is way too good to put into this drink. The prickly pear.
All right.
Yeah, it's definitely like on more on a subtle
Yeah.
pear flavoring, but yeah, no, it's good. So if you like something sour and refreshing, good drink.
Very good drink.
All right. Let's
So
talk
now-
money.
Let's talk money. So, how can you reclaim your taxes on your home? Let's start with your primary residence, which is the house that you live in. There actually is a lot of kind of cool things that you can use when you're looking at the house you live in to reclaim your taxes. So, CRA doesn't allow you to deduct in your primary residence most of your house related expenses, but they do have a few exemptions and a few credits.
Yeah.
Tell them about the first one. You were so excited
Oh
about this.
yeah. So I never heard of it. So it's something called home buyer's amount, HBA. And so what that is, you can it's a one-time 5,000 non-refundable tax credit if you are the first-time buyer or you haven't owned a house in 4 years, last 4 years, like so like in a row, I guess.
Absolutely.
Yeah. And so what is it? Gives you up to 715 tax savings? What's
In
that one
tax
part?
savings, so basically what they're doing is they're using the non-refundable tax credit to reduce your income by $5,000, and then you can get back or reclaim $750 of
Okay.
the tax that you paid on that amount that they're letting you take off your income. So that's another one. This is the one that
Yeah,
I
that one I never heard about. So, and I don't know if it's new, how long it's been around, but that's something I definitely would be recommending to a lot of our first time
100%,
buyers.
or
Yeah.
people who haven't owned in the last 4 years.
4 years. Yeah,
Yeah.
that's so great.
Now, the other one that I really like is a home accessibility tax credit.
Mm-hmm.
So, if you have someone who's disabled or a senior, if they're doing renovations to their home, like grab bars, ramps, or anything like that, to improve the accessibility of their
Yeah.
home, that accessibility improvement can be up to $20,000, and then they can actually write it off per year against their taxes.
Yeah.
So it's per year. So that means that every single year that you are either a senior or disabled, every single year you can make improvements to your house to make it more accessible up to $20,000 a year and then write it off against your taxes. So that is, and again, another incredible tax savings. And as someone like me
Yeah.
who has a mother who's a senior, who's blind and disabled and all that kind of stuff, is an amazing benefit that we can put into her house to make her safer, more comfortable, and have more
Yeah.
dignity.
And
Which
what I
I'm a
like
big
about
fan
it, it's like at least it takes a little bit that burden away,
of.
right?
100%.
Because that stuff is not cheap to put
No.
in a house to make it, convenient and easy to use for people, especially with mobility issues, right?
Absolutely.
So, and of course, there's a GST, HST, new home housing rebates. So, if you are purchasing a new home built, would it apply to like a Kenmore Airbnb?
I don't know. I'll be honest, I
That's a
don't
good
know
one.
because the GST, if
We are
you're
not any
buying,
accountants, so
yeah,
definitely a good
always.
question to ask. But yes, for sure, I know with the new builds, if you paying GST on a new build, you can get a
Oh,
rebate on that
so
one.
yeah, so if you're buying a property that is GST applicable
Yes.
and you don't have the capacity, like you're not having a capacity to live there as a primary resident, or if you're buying a property that's GST applicable and let's say it's currently an Airbnb, even though it's residentially zoned, and you're buying it to leave it and keep it as an Airbnb, you can at that point. It's not that the GST isn't applicable. GST can be applicable, but
Oh
GST, just
yeah.
because it's applicable doesn't mean it's always payable. So what ends up happening is you defer the GST at the lawyers, and then you'll do your taxes or your GST.
Well, you have to get a GST number.
You do have to have a GST
Yeah.
number. But so what ends up happening is you file saying I have to pay this amount in GST, but because you can reclaim GST when you're using it to run a business, then you also say, but I'm also reclaiming the GST at the same time. So they kind of cross each other out.
Yeah. But we are talking about like GST rebate when you build.
Yeah, for new
that
builds,
way you're like, yeah, actually apply.
because it's a primary residence.
Yeah, exactly.
Now here's my other one. This is one I talk to people about all the time. Home office deduction. So if you're self-employed, so basically if you're doing anything to earn income as a person and you're employing themselves, so sole proprietor, incorporated, anything like that, and you're using your house as base of operations for that business, you can deduct portions of your expenses like utilities, internet, home maintenance, rent. They say note not mortgage payments. So, but you can do the interest on the mortgage. I think you can write off, again, talk to an accountant, but you can do the interest on the mortgage, not the payment of the mortgage.
That's right, not principal. So I actually write off the interest on the mortgage.
So let's say hypothetically you're living in your house and you've got one room of your house, which is 10% of your total square footage. You can now write off 10% of your utilities, 10% of your internet, 10% of your home maintenance, unless it's specific home maintenance just for that. 10% of your rent, 10% of the interest on your mortgage, 10% of your property taxes. These are all things that you can do when you're having a home-based business. And now what's great about Calgary and Alberta and Canada and all this kind of stuff and the internet and everything that's happened in our lifetime well, my lifetime, because I saw this meme on the internet the other day, and it said, "Ha ha ha! You were born in the 1900s. That's so cool." Exactly right. Because that's how
Yeah.
old we are now.
Oh my God.
But anyways, so is the fact that if you just take something of your home and you make that your office and you make this business, whether it be uh, something online, whether it be a photo booth, whether it be like just find a way buying stuff and reselling it on eBay or Facebook Marketplace, and you
Yeah.
claim an income off of it, you now have a home based
I
business.
think a lot of people think like you have to have some serious
You don't.
business. Like, they don't think about some of the things. Like if you do baking or you do bouquets at home, even if it's like a part time, like,
100%.
it's still technically self employment that the
Exactly.
money that brings. Obviously, like if you have a cleaning
Yes.
business, you still have to write those invoices. You can basically do amortization of your assets,
Yeah.
which is like a printer and computer, and you can write off like some of the office supplies, even like a printing paper and things like that.
But remember, that's
Yeah.
exactly it. So it's a home based business. So you just have to have something, but you have to claim the income. So you can't have a home based business where you don't claim the income and then you take all the write offs.
Yeah.
You have to claim the income to get the write offs.
Now, if you have an investment property, so it's a property that you bought, you're renting it out, maybe it's a holding property, it's a rental property, then of course,
An Airbnb.
yes, Airbnb, like so all those things like that, it has a little bit of wider write off category. So we definitely have mortgage interest in there, property taxes, insurance on the property, utilities. If you pay them, so if the tenant pays utilities, then you don't write that off. Obviously, like
You never know. They put
yeah,
that in there for a
yeah.
reason.
So yeah, all the repairs and maintenance. So I never know the property doesn't need repair and maintenance. Definitely, even if you do like snow removal, somebody's cutting your grass, window washing, all those things, right? If you have a property management, obviously the fees. And if you have an accountant or a professional, a lawyer, anybody who is doing any kind of paperwork for your properties. Oh my
Or
God.
when you sell it, we're just going to ignore that.
Okay, sorry.
Or when you sell
Yeah.
it,
Yeah,
realtor fees.
yes, legal fees, everything, anything that you basically paid for any services to run your properties, you can write off. Um, Robin, favorite expense to write off is a travel expense.
Yes. If you have a property that's outside of Canada 2 times a year, you can write off traveling to the property to check on your investment and have your entire airfare, car rentals, hotel expense
Twice a year.
twice a year, and you can write it off against the
And
property.
if your property is actually like local, and you can do write off some gas or mileage,
you keep track of your mileage.
That's right. Like especially like if you not going there like every day, like if you make a trip, I don't know, 4 times a year, just easier to write up the mileage and like save it. Actually, the mileage cost is posted, I believe, in Alberta Services. What's the expected price for mileage cost and stuff like that? Um,
You can also, when you buy a
Depreciation.
tool, so if you have to buy a tool to fix something in your property, so
Yes.
let's say a snake for a drain or a plunger or a roto-rooter or tools because you don't happen to have any tools like a hammer or something like that. Those can also be written off because you had to buy them to fix and repair things at your property.
Also, like light bulbs,
yeah, a lawnmower.
filters, yeah, any like furnace filters. Like you have to remember everything that goes into upkeep of the property gets right off. And of course, let's say you decide to install the shed or whatever, that can be also either property improvement that you might need to depreciate, but it could be also an expense.
And
Yeah.
the big thing too is, I've had a client from Revenue Canada Taxation Department, and he said it just has to be a logical reason
Yeah.
for you to do it. So let's say hypothetically you have an Airbnb and you put a little wine fridge in the Airbnb because you know that everyone arrives at your Airbnb late on a Friday night. And 9 times out of 10, they just want to start a fire, put their feet up, and have a glass of wine and not have to run out and figure out where the liquor store is. So you leave a fridge there that says take a bottle, leave a bottle, unopened bottles only. And it's an added benefit to your clients and your guests who come and stay at your Airbnb. So all the wine that you buy to put in that fridge now becomes a tax deductible expense because this is an added improvement. And I've gone through accountants and tax people with this, and they all agree that is a proper justification. Just like if you start a show during COVID called the Tipsy Realtor, you get to write off all of the alcohol that you need for
That's
your
right.
show.
Exactly. And I think, especially with Airbnbs, like, both Robin and I quite experienced in that. There is a part where you just not just renting a space, but you also can provide an experience for your
Absolutely.
clients. So any expenses that goes with experience, you can also write it off. If you're installing a fireplace outside or
Yep.
hot tub outside, which is improves the value of your property, and you can charge extra per night.
Absolutely.
That's technically like, well, I think the hot tub will go into the depreciation
Yeah.
of assets. It's calculated a little bit differently. I'm not gonna go into it.
Same with the
But
furniture.
yeah, your account, but yeah, exactly, the furniture, everything that is like big usually goes into depreciation. Your accountant will do the calculations
Yeah.
for
So
you
those
on
are all
that
the
one.
really cool things. But here, there's also another really cool one, which I love, which I actually didn't know, is about if you have a shared home. So if you have a shared home,
Like you live upstairs and you like renting downstairs, for
exactly,
example.
or even I think it's a room.
Oh, room.
If you're
Okay.
renting a room in your house, or if you're renting the basement of your house like a suite, you can split your expenses there. You can deduct a portion of the utilities, a portion of the maintenance, a portion of the mortgage interest, a portion of the property tax, a portion of the insurance. So if you have a suite in the basement, which is a huge thing right now, all these people are putting suites in basements, you can actually
Mhm.
benefit by writing off some of those expenses because of the fact that you're using a portion of your house
Yeah,
to earn
just one, I'm
income.
gonna point it out. If you're doing those write-offs, you have to show that you're collecting income on.
Again, yes, you
Yeah,
always have to claim the income.
yeah.
So if you're
Because
collecting
a
rent
lot
and
of
you're not
people
claiming
get
it,
like cash and not show income, right? So you can't technically write off anything if you
yeah,
don't show any cash.
yeah. If you don't show any income, you can't have the write off. That's how it works.
Yeah.
Unfortunately, they are very picky about that. So,
Yeah.
but here's a big kind of tax strategy questions to ask yourself is do you work from home? Are you self-employed? Do you rent out a part of your home? Do you have any accessibility upgrades or renovations that you want to do to your home? Are you still paying a mortgage or is it fully owned? If it's
Yeah.
an investment property, do you have one or more investment properties? Are any of them short-term or long-term tenants?
Yeah, like, and we were just talking, like, I ask this question to myself every year. Like, it's like, how much income do I want to show? Do I need income to qualify for something? Let's say you guys want to buy another property. Obviously, you need to be showing more income those years. So you like, offer the bank less risk. But like, those are questions you want to ask so you can plan that with your accountant, for
Absolutely.
example, how much you're going to be writing off, how much income you're going to be showing. And of course, some people like, well, I don't need any money, so I don't want to pay taxes. And then you mitigate that. But again, everything has to be, as we said, reasonable. You have to have receipts for everything.
And you have to be able to prove and explain to our CRA.
Yeah, exactly. And did you wanted to put that graph?
Oh yeah,
on
yeah,
the,
yeah.
on
Sorry,
the
I
thing?
love this graph. You're so right.
Yeah.
So this was actually something really cool that I found. And
Such
it
a
was
great visual. Yeah.
it is. And it lets you know like personal residence, rental property, share property, prorated, like what's allowed and what isn't. So yeah, that actually is super cool. And I thought it was such a great graph. I totally forgot about that. So
Yeah. So one thing I was gonna say also, if you're new to this and you have no idea what write off, what not to write off, just collect all the receipts. If your card paid for something, just put those receipts in a folder. There's a programs and apps that will save your receipts. You can scan it to them, and we'll categorize them based on the expenses as well. And then when you sit down at the end of the year with your accountant, you have the receipts, and the ones you don't need, you'll just garbage them.
All
Yeah.
right. So we are at prize time and talking about next week. So next week, Anna's not here, but we are going to have the
Pain in the ass.
wonderful
Yeah,
Michelle here to talk about pain in the ass and buying or selling homes in Canada as a non-resident, which sometimes can be a pain in the ass.
That's right. And a lot of people are going to be asked, well, if you're not resident, you cannot buy the home, but that's, there is exceptions.
We're going to
And
explain those.
yeah, so it's good to know. And the price. So as we showed, this is, you're going to get 4 glasses, just like this looking glasses. Very nice. And if you don't need it, it's a great present.
It is. Well, and these glasses are crystal. Like, they are beautiful, beautiful glasses. So definitely, like, take a look at them. They're not, I will tell you this, is that they're not, they're diamond coupe glasses, not crystal. But they're not dishwasher safe. So you have to wash them by hand.
Okay.
Yeah, so that's like one exception to them, is you have to wash them by hand.
Handmade glassware.
Yeah,
so
and it certainly, they are impressive. Like, they're absolutely impressive
glasses. So how
glasses.
do you win this amazing prize? We're gonna be drawing a name the first Wednesday of May, and you can find us on social media. Obviously, Facebook Live, Instagram, Facebook. What you got there? TikTok, YouTube, and LinkedIn. So every time you see our Tipsy Realtors, love, like, share, tag your friends and family, even if you just like the drink. But every time we see your name gets entered that many times into the drawer.
Absolutely. And always remember, if you're looking or have anyone looking to buy or sell a house or just have a real estate question, have them give us a call. Myself, Anna, Michelle are all here to help you guys out. We want to make sure you make the right decision. There's no obligation, there's no cost, there's nothing like that. We actually really, really want to make sure that you make good real estate decisions. And I actually had like a win moment, like of actual, like 2 win moments of actual joy where we helped 2 clients buy an investment property, and both of them, 3 actually, and all 3 of them have had such amazing results, and they've been kind of keeping us up to date as to what's happening. And like, seriously, I can't think of anything that makes me more excited that we're teaching people how to have passive income and wealth and grow their wealth without mass amounts of hardship and hurt and sacrifice and all this kind of stuff. And to me, that's a pretty amazing thing. And I know that Anna shares that, Michelle shares that. We want to see you guys win, and we want to see everybody win in a way that works for them. So please make sure to give us a call. Numbers on the screen. We will help you guys out.
And Calgary is such a tricky market. It's always changing, and if you wanted to know what's happening for you, let us know.
Yeah, and no question's a dumb question. We love them all.
Yeah, exactly.
All right, thanks so much. Have a great day.
Bye.
Bye.